Okay, folks, good morning and welcome to Morning Update. Rather than doing a market wrap last night, I wanted to wait until this morning until we had the Chinese economic data that came out. Why is that important? It's because it can influence the currency markets, and our positions in commodities right now are heavily influenced by the strength of the US dollar versus the Japanese yen and the euro. I know that sounds like a bunch of gibberish to many, but it's factual. So rather than speaking on speculation, many times I'd rather just do a morning update to see what unfolded overnight, how the dollar is reacting, and then do a pulse check of how gold might open and therefore how the gold miners might open. Before I get to that analysis, let's talk first about economic data. Not much this week with the exception of PPI, the producer price index, and retail sales. So those come out on the 13th. So I think that we're going to see continued pressure on gold until we see some data that points out that there may be some slack in the U.S. economic picture, and that might put some pressure on the U.S. dollar. Historically, the U.S. dollar is strong this time of year, seasonality in the U.S. dollar. Before I get to a further chart on that, let's talk about the Dow Jones performance yesterday. Bearish reversal day. We're up in the pre-market on the news out of Asia. I'm not quite sure what that really means for us, but the market is responding optimistically. We'll see whether or not it can hold those gains. We do not want to act too early to that news. Let's let the market settle down to absorb the economic data. Let's let the first hour of trade pass by. Then we'll see whether or not this market really does have traction and can continue higher. But according to yesterday's price action, it's not looking that good on the Dow Jones. The NASDAQ comp topping action closed well off the highs of the day. Volume dropped off to the upside yesterday. S&P 500 daily chart met resistance, backed off of resistance. Volume to the upside, very, very weak. The Russell 2000 sold off the highs of the day. Although higher, closed above its 200-period moving average on volume to the upside, which continues to drop off. Energy. This is really critical for this market because energy is where the price performances come from to keep this market aloft. And energy did quite poorly yesterday, down 1.5 percentage points. The banks down yesterday. You need your banks. You need the Russell 2000 for the markets to continue higher. Right now, there are signs of concern out there. Oil closed down yesterday. The dollar continues to rally except for its performance versus the euro. The euro did show some strength after I went to bed last night. So oil weak on the stronger U.S. dollar. All right, now to the chart of the U.S. dollar. You could see this is a daily chart. We are nearing resistance, stiff resistance on the U.S. dollar on both a weekly and daily basis. And this chart here is a chart of gold. Overlaid in blue is the euro versus the U.S. dollar. So if the line in blue declines, that means the euro is stronger versus dollar. The opposite is true for this line in gold, which is the US dollar versus the yen. And the long story short here is I created this chart to see whether or not the influence of a stronger yen had more influence over the price of gold versus the strength of the euro. And in short, the price fluctuation of the yen has more influence on gold than what does the euro. So the Japanese foreign minister came out overnight, threatened of more intervention in the marketplace if traders kept buying the Japanese yen. What does that do? It, of course, pressures the yen lower versus the U.S. dollar. Not good for the gold trade. Again, gold and the U.S. dollar seasonally adjusted for the month of May is traditionally weak for gold, strong for the US dollar. Gold hasn't had an up month in May since 2010. So let's talk about NUGT. Horrible day yesterday, huge gap down. We've come to respect, we've come to understand that this is a very, very volatile instrument. Now, while gold is up in the pre-market, Nugget is up slightly as well relative to yesterday's price action. Last I looked, it was up $1.85 in the pre-market, but it was down $20 yesterday, so not much of a comeback. And I don't expect one right now. I think that we're going to get a lot of backing and filling within a trading range. I think that 85 to the lower band of that trading range is reasonable, with 105 to the upside being reasonable. Now, if we do get strength, what I may do is either A, lighten up on our NUGT position, or B, sell covered calls. And that'll bring us in some income until we can move out into the June period, where we'll look for some strength in gold once again, and hopefully a pullback in the US dollar. And that will cause gold to move higher. Therefore, gold will move higher as well. They do sell weekly options on NUGT with pretty reasonable, not reasonable, very, very good premiums. So we'll look to bring in some income off of NUGT. If you have any questions on that, just shoot me an email. All right, let's talk about Iron Mountain Inc. We opened up a short position yesterday. Why did I do that? Well, on a daily basis, we had RSI over 87. We were piercing the upper band of resistance on a daily chart. Volume had been declining. It spiked up yesterday because you saw sellers move in, adding to that volume. It just managed to close positive on the day. And when you take a look at a 30-minute chart, as it began to go parabolic here, we opened up a position. Then we added more here as it moved to a parabolic intraday move higher, and then it sold off late in the day. We're looking for a break on IRM. Let's go to a 2-hour chart, perhaps down to the 3750 level, thereabouts, and hopefully even lower. So our IRM, we may look to add on strength if it continues to move higher, because it's just unsustainable. Back to daily chart. It's just unsustainable, this move higher. This is a play on yield. A lot of investors are buying IRM because it pays a dividend yield. But as we know with Potash, just because you buy a stock for a dividend yield doesn't make it a sure play. It can pull back just as Potash did, and that pays a higher dividend yield than what does IRM. Yes, this is a profitable company where Potash is not doing as well, but this extreme overbought condition is unsustainable. PLG, I think that with the month of May being a weak month for the US dollar, it provides us opportunity. I think that the timing of their secondary offering was pretty poor to have it done in the month of May. They should have understood that it would have had a magnified effect, negative effect on their stock price, but be that as it may, the reality is they announced a secondary offering in the month of May. We know that to be a weak month for the US dollar, and it's having a magnified effect. Will I look to add to PLG? You're darn right. So as soon as we hit a support level, we'll look to add more to this position. So PLG, yes, not looking good, but I think that we have opportunity here, and we'll look to add to our position in the coming week or weeks. So we're going to hold long right now. And that's it, folks. Let me get this out to you. Everybody have a profitable trading day. Keep an eye on the US dollar. And I will be thinking about selling covered calls. I'll let you know if I do or not on NUGT. Have a good day.